we had marginal declines filtering through to the market yesterday, and a question on the top of everyone's minds right now, on the back of what kind of activity from a volume perspective?
Well, Claire, as you know, for the first couple of days this week, the market was going up. The likeliness that caused that was perhaps the profit taking, which is inevitable in cases. You still have a lot of investors doing short-term outlook for the market. And you had a case yesterday where there were quite a lot of sales in terms of taking gains that had been achieved.
We've got now volumes, though, relatively speaking, on the decline or on the incline?
Well, you find typically because of the sheer volume you have in terms of banking stocks on the market, the activity or the performances of banking stocks tend to reflect what happens in the market. There were significant volumes done where bank stocks were concerned, but interestingly, one of the top 5 trades yesterday was a Como oil palm. And it clearly shows that there are some non-bank stocks with some significant trades coming up. But yes, I think we'll start to see volumes in the market.
Well, we've certainly got some market operators starting to get a bit more optimistic that we've got the new issues market set to increase activity. Do you anticipate an increase of activity levels to that we saw about 3 years ago, where we had the markets pretty active?
Well, there are beginning to be some signs indicating that towards the end of this year we should have some new filings towards new equity issues. And the first indicator to that is we've got a couple of results out this year where you've got bonus shares being given along with dividends. Investors are beginning to see rewards, returns on the risk they've taken in these companies. Those who've held out in spite of activities of the past 3 years are beginning to get a feel that companies are beginning to perform. In addition, now we've got the elections over, there's another 4 stable years to look out, so the perspective is beginning to look a lot longer to a lot of people. Being that as it may, with bonuses out now, you'll expect the shareholders to start feeling very confident. I imagine that for a lot of companies who still want to source much needed equity capital, it will soon be about rights, to start thinking in terms of rights issues. First, building up the confidence with the existing shareholders and then testing their companies with the larger public. So yes, there's a tendency that new equity issues will start being considered.
Is there a leaning towards where we could see bulk of these new issues emerge, or are you looking at across the board if we're looking at things on a sector basis here?
Well, banking stocks, as always, yes, are something to go for. But I really would want to look at other sectors outside the banking sector. And some areas where we have looked at our construction, we've looked at paints, and we've looked at chemicals and other industries. I can talk about CAPL, for instance. That's a company that's recently paid a dividend of 3 naira and a bonus of 1 for 1. It's a company that's been performing pretty well in the recent past, and it's pretty clear that there's a lot of investor confidence in this company. It also does not have a significant amount of shares in free float because it has a core investor holding about 48% of its stock. So you have stocks like that that are pretty much in demand. And I can imagine that when companies that have those sort of features come out with a rights issue, you will find investors wanting to take up the stock.
Investors from what camp? Because we know that where the pension fund has been the main source of institutional investing, in the market over the recent past, to what extent are you anticipating a shift in terms of who's actually going to be playing in this market from here on out?
Okay, fine. If I did have a new primary market equity issue right now, there are 3 main investors I'd be looking at. First will be the existing shareholders of that company. Then I'd also be looking at the pension funds. For now, there are the key institutional investors around in the markets here in Nigeria. And then, of course, there are the foreign investors who are always looking in and doing the analysis to see what sort of companies are offering significant returns in the near future. Clearly, the pension funds have their own rules and regulations in terms of what criteria fits into which sort of companies they can invest in. A good number of companies have been working towards making sure that they meet the profile, the investment profile that would suit the institutional investors. A good number of the pension funds also in the past couple of years has shifted away from equities to bonds, purely debt. And I imagine that right now they'll be looking to some equities to sort of balance their portfolios towards the future.
So safe to say then that we've got a stiff competition for investable funds on the cards between debt and equity?
Oh yes, clearly, because right now with the pension funds out there, they're going to be looking and saying to themselves, wow, we've got a portfolio on hand now. We've had so much debt in the past couple of years. Prior to that, we had some equity to come on. And right now, with the debts being a bit on the decline and the equities coming up, the tendency will be to say, fine, we have to do the analysis and we've got to decide how best to balance our portfolios in the years to come. It's not likely that 3 years ago, the kind of risk profile pension funds took will also be taken. There must be a balance, and in terms of the instruments too, there must be some kind of creativity in terms of the features, because convertibles with a feature of debt and a feature of equity would also remain attractive.